Hello, hi guys. This is CA Balakrishna from Lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. Now, in the today's class, we will be discussing RTP of November 2023 for CA Final Audit. I'll be trying to discuss this within a short period of time. Okay, this video it will be for around 30 minutes to 45 minutes, so that you will be able to cover this entire RTP within a short span of time. Okay, now without any waste of time, let us start discussion of this RTP, starting with the integrated case scenario. First of all, I'll briefly explain you what this case scenario is. There is a NBFC, non-banking financial company by name Rainbow Non-Banking Financial Limited. Now, to audit this non-banking financial company, this auditor by name Tirthan Kara and Company has been appointed, and these are the net owned funds of this non-banking financial company for past 4 years. Now, while audit, basically this non-banking financial company, it will deal with refinancing of accounts payable. Now, in order to audit this accounts payable, to test understatement in existence or valuation of accounts payable, Mr. Abhinandan is a auditor. He has decided to test recorded and refinanced accounts payables. Okay, he has decided to test recorded and refinanced account payables that are present in the books of accounts for the purpose of determining understatement in existence or valuation of the accounts. This is a situation. And during the audit, Mr. Abhinandan also found a particular fraud wherein the employee, instead of paying amount to the party, he has misutilized the amount, and the amount involved in such fraud is 25 crore. Okay, such a fraud has been noticed by the auditor, and auditor, that is Mr. Abhinandan, after completing the audit, he also approached EQCR, Engagement Quality Control Reviewer. No other observation was identified by Mr. Abhinandan. He is considering to express unmodified opinion in the above situation. He has also approached EQCR to review working papers and documentation. Okay. Now let us see what are the questions that are being asked. Question number 1. While reviewing working papers of Mr. Abhinandan, the Engagement Quality Control Reviewer identified that the audit procedure followed to test for understatement in existence or valuation of accounts payable refinanced is not relevant. Okay, the Engagement Quality Control Reviewer is saying that the testing of trade payables is not relevant to identify the understatement. Yes, because with the help of testing the account payables, you can find overstatement, but with respect to the understatement, you cannot get complete confidence by just testing the recorded trade payables, because there can be some other unrecorded trade payables, right? They might be missed. So by just testing the recorded trade payables, you cannot get confidence with respect to the understatement, but with respect to the overstatement, you can identify. If at all there is any overstatement, you will identify by testing. So what he is asking, however, Mr. Abhinandan did not understand the comments provided by EQCR. Kindly guide Mr. Abhinandan with respect to the relevance of the audit procedure by selecting the appropriate option from below. Okay, let us see what are the options that are given below. First one, option A. Let me not take this. First of all, read this. Relevance deals with the logical connection with or bearing upon the purpose of the audit procedure, and where appropriate, the assertion under the consideration. Yes, that is a definition of the relevance. Okay, logical relationship between the uh, audit evidence and the assertion, that is known as relevance. Okay, up to here it is correct. Next, what they are saying, in the current case, In the current case, testing accounts payable by following stated audit procedure will be relevant for testing overstatement, yes, in the existence or valuation of accounts payable and not their understatement. Yes, the option A is correct. The current testing procedure used, with help of that you can find out if there is any overstatement, but understatement you cannot find. Even though you can find some of the understatement, you cannot get complete confidence with respect to understatement. Let us also read other options. Relevance deals with the logical connection with bearing upon the purpose of audit procedure. Okay, the definition is correct. Next, what they are saying, in the current case, testing account payable will give comfort on completeness and valuation, but not on existence. No, okay, you should also obtain uh, confidence with respect to existence also. So option B not correct. Relevance of information to be used as audit evidence and therefore of the audit evidence itself is influenced by its source. No, it is completely irrelevant for the question asked. The relevance of audit evidence is increased when it is obtained from independent source outside the entity. No, the reliability, okay, here the reliability of the audit evidence will increase if it is obtained from an independent source. So option A will be correct answer. Moving to the next MCQ. During the review of Mr. Abhinandan's working paper, the EQCR observed that Rainbow Non-Bank Limited's performance was subpar, with the net owned funds standing at 2.5 crore at the close of the financial year 2023. The EQCR believed that Mr. Abhinandan was expected to include net owned fund in the auditor's certificate for the year end. However, Mr. Abhinandan disagreed with the same. Can you please provide guidance on the accurate reporting obligation in the current case? Basically, in case of NBFCs, for every year you need to give a certificate whether NBFC is eligible to hold the certificate of registration or not. With respect to this, a auditor certificate has to be obtained. Let us see the options. Every NBFC is required to submit a certificate from the statutory auditor that it is engaged in the business of NBFC, requiring it to hold certificate of registration and it is eligible to hold it. Yes, such a certificate is required from the auditor every year. Certificate with respect to the position of the company as of end of financial year ended 31st March is required to be submitted. Yes, it is required to be submitted for every year for the year end 31st March 2023. Option A looks good. Let us also read other options. Non-banking financial company whose net owned fund fall below 200 lakh shall submit certificate. No, there is no such a requirement that you need to submit certificate only if it falls below 200 lakh. No, this option is wrong. A certificate from statutory auditor with reference to the position of company as of end of financial year 31st March may be submitted to the regional office of a department of non-banking financial. However, the same is not mandatory. No, it is mandatory. So even this option is not correct. Only for NBFC Microfinance Institute, a certificate from statutory auditor with reference to the position of company as of the end of the financial year. No, it is required for all the NBFCs, not only for NBFC MFI. So option A looks good. Next, moving to third MCQ. Regarding the issue involving the embezzlement by senior sales manager, I have told you now there was a fraud to the amount of 25 crores that has been found by the auditor. So what is the most appropriate compliance action for Mr. Abhinandan under the provisions of the Companies Act 2013? Basically, since the amount involved in the fraud is more than 1 crore rupees, so you need to first of all communicate it to the audit committee or to the board of directors as per the availability, and you need to wait for 45 days for their reply. And if you receive their reply within next 15 days, you need to communicate it to the central government. If you don't receive their reply within 45 days, then you need to communicate to the central government stating that you need to submit the report to the central government that an amount of fraud of this much is involved. Okay, let us see which option holds good. As per section 92, no, section 92 doesn't deal with this aspect. As per section 140 subsection 12, okay, of the Companies Act 2013, read with Rule 13, if an auditor of a company in the course of performance of his duties as statutory auditor has reason to believe that an offence of fraud which involves or is expected to involve individually an amount of rupees 1 crore or above, yes, is being or has been committed against the company by its officers or employees, the auditor shall report the matter to the central government. Yes, option B looks good. Next, option C Yes, as per section 140 subsection 12 Companies Act, if auditor found any performance duties has reason to believe offense of fraud which involves expected to involve amount 10 crore. No, it's not 10 crore, it's 1 crore. Option D, section 92 again irrelevant. So option B is correct answer. Next, MCQ number 4. Considering the overall materiality of 2 crore, EQCR believes that Mr. Abhinandan should not issue an unmodified opinion. Mr. Abhinandan, however, argues that he has not identified any material misstatement to guide Mr. Abhinandan appropriately. The following option is most suitable. Basically, if there is any misstatement in the financial statements, let's read the options first of all. Uh, what option A says? If auditor has expressed unmodified opinion on financial statements, then the auditor shall describe in the basis for opinion section the reasons for any other matter of which the auditor is aware that would have required modification to the opinion and effects thereof. Yes, if the auditor, sorry, if the auditor gives unmodified opinion, he need not give the reason for this unmodified opinion in the basis of opinion. So this option is not wrong. If he gives modified opinion, then the reason for such modified opinion he need to give in the basis for opinion paragraph, right? Next, if there is a material misstatement in the financial statement that relate to non-disclosure of information that should be disclosed, okay, then the auditor shall discuss the non-disclosure with those charged with governance, and where the impact of non-disclosure is material but not pervasive, then the auditor should issue a qualified opinion, okay, what the statement saying is correct only. Next, C, option C also. When evaluating the outcome of litigation, the auditor should record in the audit report the interest and relationship of management that may create its. No, while evaluating outcome of litigation, the auditor's report, it need not mention the interest and the relationships of the management that is involved in the litigation. No, that requirement is not there. If the auditor has expressed an unmodified opinion along with emphasis of matter paragraph, then the auditor shall describe basis for emphasis of matter. No, there will be no such paragraph as basis for emphasis of matter paragraph. Even this requirement, it's not there. So if you see from the options, the statement B is correct. So option B holds good for MCQ number 4. Next, fifth MCQ. On noticing the issue means that fraud is there na, regarding that, Mr. Abhinandan reported the fraud to the audit committee within 2 days of his knowledge, okay, seeking their reply or observations within 45 days, okay. However, neither the audit committee nor management replied to the auditor till the 45th date, okay. He has waited till 45 days and no reply he has received. Now kindly guide what the auditor is expected to do in the case when he is not received. Then he needs to immediately forward his report to the central government along with a fact that he has communicated this about this fraud to the audit committee, but they have not given any reply. Let us see which option holds good. In case the auditor fails to get any reply observations from the board within stipulated period of 45 days, he shall wait for next. No, he should not wait for next 45 days. He should immediately submit reply. In case the auditor fails to get any reply or observation from board or audit committee within stipulated period of 45 days, he shall report the matter to shareholders. No, you need not report to shareholders. You need to report to central government. In case the auditor fails to get any reply, observation, board, committee within stipulated period of 45 days, he shall forward his report to the central government. Yes, along with a note containing the details of his report that was earlier forwarded to the board or the audit committee for which he has not received any reply or observations. Option C is correct. And let us also read option C. Option D. In case the auditor fails to get any reply, okay, within stipulated period of 45 days, he shall forward his report to CFO. No, you need not forward to CFO. Okay, you need to forward to central government. That was integrated case scenario. Moving to independent MCQs. MCQ number 6. You are tax auditor of a manufacturing firm. Net profit of the firm is 15 lakh. Okay, after debiting the expenditure including salary to the partners. Okay, the partnership firm has earned a profit of 15 lakhs after debiting the salary or the remuneration that has been paid to the partners. Okay, the partnership deed of the firm stipulates payment of salary to the working partners as follows. Okay, following is the salary that is paid to the working partners. How much 1 lakh for partner A, that means 12 into 12 into 12. Here they have given it on a monthly basis. So on a yearly basis, it will around to 12 lakh, 12 lakh, 6 lakh, it would be like 30 lakhs, right? Now, what he is asking, which is correct regarding the reporting duty while uploading form 3CB and 3CD on e-filing portal. Basically, here you need to determine what is the amount of salary that is allowable. So, in order to calculate allowable salary, first of all, to the net profit, you need to add up the remuneration. So, you will get 45 lakh as book profit, right? Now, in the book profit, for the first 3 lakhs of book profit, 1,50,000 or 90%, whichever is higher, will be allowed as a deduction for salary to the partners. And for a profit which is above 3 lakhs, 60% of the profit will be allowed as a deduction in respect of salary. Now, if you see here, for first 3 lakhs, okay, for first 3 lakhs of profit, 2,70,000 will be allowed as remuneration, and for next 42 lakh, you will get 60%, right? 60% means it would be around like 25 lakh. Okay, let me use calculator. Yeah, 42 lakh, 60% of 42 lakh, right? You'll get 25 lakh 20,000. So 25 lakh 20,000. So in total it would be 27 lakh 90,000. So 27 lakh 90,000 is a maximum remuneration that is allowable. But if you see here, they have taken 30 lakhs as remuneration. So amount of remuneration that has to be disallowed is 2 lakh 10,000. So this is the amount of remuneration that has to be disallowed. Now let us see the options. The whole of the partner salary is allowable. No, it is not allowable. You need to disallow 2.10 lakh. Next, option B. The partner salary is not fully allowable, yes, and inadmissible amount of 2.10 lakh is to be reported under clause 21C of form 3CD. Option B is correct. Next, moving to MCQ number 7. CA Vishuddh is auditor of a company having 15 inventory locations in the country. In view of multiple inventory locations and logistic issues involved, he decides not to attend physical inventory count process of the company. Okay, since there are a lot of inventory locations, the auditor is deciding not to attend the inventory counting. Whether it is correct? No, it is not correct. You must attend the inventory counting. Let's see what he is telling. The company management also sends him digital evidence comprising of videos of inventory counting process at different locations as on reporting date with date and time stampings. Besides verifying inventory records, he also performs alternative audit procedures like examining details of subsequent sales of specific inventory items acquired prior to the physical inventory counting. Which of the following statement is most appropriate in this regard? Basically, here what I'm thinking is like the action that has been done by CA Vishuddh is not appropriate. He must have attended the inventory counting procedure. Let us see what the options are saying. Option number A, the procedure adopted by auditor is in accordance with the standards on auditing. No, it is not in accordance with the standards of auditing. Let's see. As the auditor has obtained digital evidence. No, this is not correct. The procedure adopted by auditor is in accordance with the standard auditing. No, standards on auditing doesn't tell you that you just obtain some digital evidence and it is completely okay if you don't attend inventory counting. The auditing standards, they never say that. So even option B is not correct. The procedure adopted by auditor is not in accordance with standards on auditing, as the auditor can skip the attendance at inventory counting only when attendance is unfeasible. Okay, if it is unfeasible to attend the inventory counting, then you can just rely on certain alternate audit procedures. But just because of the reason that there are large number of inventory locations, you cannot skip attending the inventory counting. So I think option C holds good. Let us also read option D, what it says. The procedure adopted by auditor is in accordance with standards. No. So option E is correct answer. Option C is correct answer. Next, 8th MCQ. Guru Private Limited uses in-house developed application system for accounting. The auditor observed that user ID and password is mandatory to access the application system and felt that this is good control. What type of control it is? Basically, if you see, it would be preventive control, because having user ID and password will prevent unauthorized access to the system. Okay, you can also get a doubt that it can also be a application control, because this control has been with respect to a specific application. But when you see, the option D would be more relevant when compared to option B. Okay, if in case you are having another option by saying both option B and option D, then you can select option B and option D. But since there are only 4 options, considering preventive control is more relevant, option D would be correct. Okay, next. So that was with MCQs. Next, moving to the descriptive questions. Question number 9. Mr. Shreyans, while performing the audit of Red Rock and Silver Sand Limited, which was involved in phosphorus mining, decided to appoint auditors expert for valuation of environmental liabilities and site cleanup cost. Okay, he wanted to appoint an auditor expert. Now, Red Rock and Silver Sand Limited reappointed Mr. Sheetal as an independent expert for this engagement. Mr. Sheetal is management's expert. For the last 5 years, management has been reappointing Mr. Sheetal. Okay, Mr. Sheetal has been reappointed as management expert for the last 5 years. Mr. Sheetal calculated the environmental liabilities pertaining to completed mining sites and the sites which will be discarded in the near future, and a provision for cleanup costs. This provision was accepted by the management. Mr. Shayans, that is auditor, after performing inquiries with the management, was of the opinion that the objectivity of the independent expert cannot be questioned because he was appointed by management as their expert. No, the conclusion reached by Mr. Shreyans is not correct, because just because of the fact that the management expert has been a third party. Okay, he is not an employee of the organization, but an independent third party has been appointed by management as a management expert. It does not mean that he will not compromise on his objectivity. There are obviously certain threats to the objectivity of the management expert. Even though he is a external party, even though you implement certain safeguards, there will be threats to the objectivity. So the auditor, before deciding to use the work of the management expert, he must evaluate the objectivity of the management expert. Let's see. Hence, there is no need to raise a question on objectivity of Mr. Sheetal or on his work performed by the company. That was, the understanding made by Mr. Shreyans. But however, the audit partner was of the opinion that audit team needs to evaluate the objectivity of the expert engaged by the entity. Yes, the audit partner is correct. You must evaluate the objectivity of the management expert if you wanted to use his work, irrespective of the fact that he was appointed as an independent expert. Whether the management expert is an employee of the organization or he is an external party who is engaged by the organization, the auditor, before using management expert's work, he must evaluate the objectivity of the management expert. Okay, that you need to mention. So kindly guide the audit partner and Mr. Shayans with respect to requirement pertaining to evaluating objectivity. Yes, they need to evaluate the objectivity. The contention of audit partner is correct, but the contention of Mr. Shayans is not correct. That you need to conclude. Next, question number 10. CA Paras has been appointed as the CFO of Prashant Limited. In this role, CA Paras is tasked with the responsibility of ensuring that the company's entities operations are conducted in accordance with relevant laws and regulations. Okay, his duty is to ensure that the company performs its business as per the relevant laws and regulations. As part of his duty, CA Paras is emphasizing the importance of adhering to all applicable laws and regulations. Okay, now what they're asking. Now, CA Paras wants to implement policies and procedures in an entity that can assist in the prevention and detection of non-compliance with laws and regulations. Help CA Paras by citing examples of such policies and procedures. Okay, now CA Paras want to implement policies and procedures in the organization so that non-compliance with laws and regulations will not occur. Here you need to refer SA 250. As per SA 250, what you can do? You can maintain a register of applicable laws and regulations to the entity, and you can comply with those laws and regulations. You can develop a code of conduct for the employees, and you can give training to the employees on that code of conduct, and you can monitor the implementation of the code of conduct. If any of the person doesn't follow the code of conduct, you can take appropriate action, and you can design standard operating procedures by keeping into consideration the requirements of applicable laws and regulations. Okay, based on the requirements of applicable laws and regulations, you can prepare standard operating procedures. And you can also appoint, or you can take help of an external legal advisor. Okay, all this you can do in order to, all these controls you can place in order to avoid non-compliance with laws and regulations. Okay, so those policies and procedures you can implement in the organization. Next, question number 11. CAF has been appointed as statutory auditor of XYZ Limited for the financial year 2023. XYZ Limited has one subsidiary named AT Private Limited. Okay, CAF is auditor of holding company, that is XYZ Limited, and CAB is auditor of subsidiary company, that is AT Private Limited. Now, what's the issue? CAB, that is auditor of subsidiary limited, issued a qualification in Caro 2020 for AT Private Limited, stating that short-term funds raised were utilized for long-term purposes. When consolidating the financial statements, the CAF decided to include the aforementioned qualification in the audit report of the consolidated financial statements for the financial year 22-23. The management of XYZ Limited argued that CAF is not obligated to take into account and report the qualification given by CAB in the audit report of the subsidiary company in the consolidated financial statements for the financial year 22-23. Discuss the reporting requirement as per Caro 2020. Basically, what's the issue here? The auditor of subsidiary company in the Caro report, he has given a qualification. Now, the auditor of the consolidated financial statements wanted to refer that the auditor of subsidiary, he has given a qualification. Okay, this qualification, the auditor of consolidated financial statements should is also wanting to mention it in his audit report of consolidated financial statements, whether he can do so or not. If you see, as per Caro is not applicable to consolidated financial statements generally, except clause 21. Now, what clause 21 says? As per clause 21, in the consolidated financial statements, you need to mention the qualifications that are made in the Caro reports or audit reports of the subsidiaries by the subsidiary auditors. So in this case, the auditor of subsidiary in the Caro report, he has given a qualification. So that qualification must be mentioned in the Caro of consolidated financial statements. Okay, so the audit report of the consolidated financial statements must mention the qualification that has been made by the auditor of the subsidiary company in his Caro report. Okay, that you need to conclude. So here the contention of management that auditor of consolidated financial statements should not refer to the qualification that is made by auditor of subsidiary is wrong. Okay, with respect to Caro. Next, question number 12. XYZ Limited, involved in the hospitality business, appointed Charan and Karan Associates as their statutory auditors for financial year 22-23. Management of XYZ Limited, while drawing up the financial statements of the said period, decided to add the following statement after the statement of cash flow as a supplementary information to be presented with the financial statements. No specific mention or labels were added to the statement to present that it is a supplementary information. So, What is the supplementary information is about? It is about statement of average revenue per booking. If you see this average revenue for booking, it is not integral for the financial statements. Okay, it is not integral for understanding the financial statements. The users, they can understand the financial statements even without this information. So this is not integral part of financial statements. Okay, so as per SS 700, with respect to the supplementary information, if the supplementary information is integral part of the financial statements, then auditor's opinion should also include opinion on that supplementary information. But if that supplementary information is not integral part of the financial statements, then the auditor's opinion, it need not include the opinion on the supplementary information. Now, if the supplementary information has been presented by management in such a way that it is integral part of the financial statements, but it is not integral part, the management has presented it as if it is an integral part. The users, by reading financial statements, they will come to a conclusion that this supplementary information is integral part of the financial statements, and auditor has included his opinion on this supplementary information also. But in fact, that supplementary information is not integral part, and auditor has not given his opinion on that supplementary information. So in that cases, the auditor, he needs to request the management to properly present this supplementary information apart from the financial statements. Do not include it as a part of financial statements. Okay, proper disclosure or proper heading must be given that this is a supplementary information. If management refuses to change the presentation of such a supplementary information, then auditor, in his audit report, he needs to mention that this is supplementary information which is given by the management in the financial statements. On that, I am not giving any opinion because that is not integral for the financial statements. Like this, the auditor must mention in the audit report if the management refuses to change the presentation of the supplementary information. Okay, that you need to write here in question number 12. Next, question number 13. In the financial year 22-23, Moksha Limited faced an extraordinary event, that is earthquake, which destroyed a lot of business activity of the company. These circumstances indicate material uncertainty on the company's ability to continue as a going concern. So, due to such event, it may not be possible for the company to realize its assets or pay off the liabilities during the regular course of its business. So, it should be disclosed. The financial statements and the notes to the financial statements of the company do not disclose this fact. What kind of opinion should the auditor give? See, if you see here, this event, it is material as well as it is pervasive, and the auditor is having proper evidence that the disclosure is not made. So, here you need to give adverse opinion. Okay. Next, question number 13b. How does inclusion of emphasis of matter paragraph in the auditor's report differ from the disclosure of key audit matter paragraph? This is a direct question. They are asking you the difference between emphasis of matter paragraph and key audit matter paragraph. You can go through that. Next, question number 14. Subahu Limited is an investment company preparing its financial statements in accordance with Ind AS. Okay. Financial statements are prepared as per Ind AS, and it is an investment company. Remember that. The company obtains funds from various investors and commits its performance for fair return and capital appreciation to its investors during the year under audit. It has been observed that the company has invested 25% in S1 Limited, 50% in S2 Limited, 60% in S3 Limited of the respective share capitals of the investee companies. When checking the investment schedule of the company, an issue cropped up as to whether there would arise any need to consolidate accounts of any such investee company with those of Subahu Limited in accordance with the section 129 of the Companies Act. Basically, if you see here, we are following Ind AS. As per Ind AS, if the company is an investment company, it need not prepare consolidated financial statements. So, in this case, the company is satisfying this condition of investment company, so it need not prepare consolidated financial statements. Exemption is available. Next, question number 15. AB Limited is a listed company ranking top 500 listed entities as per SEBI for the financial year 22-23. Okay, you are required to comment on the following circumstances in the light of SEBI LODR regulations. Okay, let us see. First point. The board of directors of AB Limited company comprises of total 5 directors. No, the board of directors of top 2000 listed entities must contain minimum 6 directors. So first point, it is in contravention of LODR regulations. Next, the independent directors of AB Limited did not hold any meeting in the financial year 2023 without presence of non-independent directors. Again, non-compliance. As per LODR regulations, the independent directors must hold at least one meeting during the year without presence of non-independent directors. Next, risk management committee of AB Limited devised policy for board diversity. No, the policy for board diversity has to be devised by nomination and remuneration committee, not risk management committee. Next, the chairperson of a stakeholder relationship committee of AB Limited is an executive director. No, he must be a non-executive director. Okay, the chairperson of stakeholder relationship committee must be a non-executive director. AB Limited submitted a quarterly compliance report on corporate governance for the quarter ended 30 September 22 on 25th October 2022. Basically, the corporate governance report, quarterly corporate governance report, you need to submit it within 21 days from the end of the quarter. But if you see here, it has been submitted in 25 days. So again, non-compliance with the LODR regulations. Next, moving to question number 16. SPS Limited, a listed entity, has constituted various committees instrumental in robust corporate governance practices. Okay, as necessitated by prevailing legal and regulatory obligations over the course of the financial year 2023, several significant matters emerged, which were deliberated upon during their respective committee meetings. Okay, basically, they are giving certain issues and they are asking you which committee will deal with those respective issues. Let us see. First one, complaints and requests received for non-receipt of refund amount relating to subscription of rights issue of the company. This issue, it will be dealt by stakeholder relationship committee. Next, various measures taken by the company to enable security holders to claim hitherto unclaimed dividends due for transfer to investor education protection. Again, this issue, it will also be dealt by shareholder relationship committee because it is with respect to the shareholders. Next, upgraded evaluation criteria for board, its committees and directors were approved. It will be approved by nomination and remuneration committee. Next, omnibus approval audit committee. So these are the committees that will deal with respective issues. Next, question number 17. PQS and Associates are one of the joint auditors of Canva Bank for the year 22-23. While auditing Canva Bank, they are analyzing industry data relating to NPAs in the selected public sector undertakings. Okay, so this is our bank, Canva Bank. Along with Canva Bank, they have also given the details with respect to other banks of gross NPA, net NPA, and ratio of net NPA to net advances. Now, what they're asking in the above context, what do you understand by gross NPA and what do you understand by net NPA? See, gross NPA is the total amount of NPA, opening NPA and NPAs that have arisen during the year. Total together becomes gross NPA. What is net NPA? Net NPA is gross NPA minus provisions that you have made and minus interest if at all it is any interest if any present in the suspense account. Okay, so this becomes gross NPA. Sorry, this becomes net NPA. Gross NPA minus provision. You remember that gross NPA minus provision becomes net NPA. So that is the definitions of gross NPA and NPA and net NPA. Still, what they're asking, as an auditor of Canva Bank, what inference would you draw by comparing ratio of net NPAs to net advances with other public sector banks? Now, they're asking you what analysis you can make by seeing these ratios. If you see the ratio or bank, Canva Bank is 3.97%. Okay, the ratio of net NPAs to total advances of NPA of Canva Bank is 3.97%, which is highest when compared to other banks. That means you can come to a conclusion that Canva Bank might have provided lesser provision. Okay, because here we are seeing net NPA. When the net NPA to total advance ratio is high, the Canva Bank might have provided lesser NPA, or the amount of NPAs of Canva is very high. So because of these reasons, the net NPA to advance ratio of Canva Bank is high when compared to other banks. Next, question number 18. CA Sundaram is an engagement partner conducting a statutory audit of nationalized bank. The bank operates on CBS platform and the identification of NPAs is system based in accordance with RBI guidelines on asset classification. He wants to be assured of satisfactory operation of internal control in this respect. He wants to be sure that there exists an internal control system in the bank which not only prevents and reduces the risk of loan assets becoming non-performing at the initial stages but also sends out timely signals to the bank subsequently. He is putting considerable importance on effective credit appraisal due to their role in the preventing of NPA slippages. Okay, basically he is trying to implement internal controls so that NPS will be reduced. If at all any account is turning into NPA, it will be noticed prior to hand only, and at the time of granting the loan only you have to identify whether it would be a good loan or will it turn to a bad loan. So while carrying out walkthrough of internal controls over advances of banks, especially in area of credit appraisal and credit monitoring. Credit appraisal, when you do at the time of giving the loan itself, you do credit appraisal. So at that point of time only you wanted to implement the controls. So in this area, what controls you can expect? First of all, while giving credit to any customer, you can access the data with respect to the customer that is available with the third parties. Based on that, you can decide whether to give loan to the customer or not. And once you have given loan to the customer, you will be having the repayment history of the customer. This repayment history you should also share it with the other credit companies that are available in the market, so that even this will be useful for their decision making also. Next, you should also implement classification as per SMA, that is uh, special mentioned accounts. Before classifying it as NPA, there will be SMA 0, SMA 1, SMA 2. This classification also you should follow, and you should implement early warning system wherein it will give you a warning if at all the probability of the account turning into NPA is high. Okay, these controls you can expect. Next, question number 19. Plus Insurance Limited agreed to insure a large commercial client. Due to the size of this client's operations, there is a potential risk that it could suffer a substantial loss. It would be financially difficult for Plus Insurance Limited to pay entire claim itself. To spread this risk, it contacted Minus Insurance Limited to cover a portion of risk. Minus uh, because it on the condition that it receives its portion of premium the client has paid to Plus Insurance Limited. Briefly explain the insurance arrangement in the present case and its type. Basically, this type of insurance arrangement we call it as reinsurance arrangement, and types of reinsurance arrangement: facultative reinsurance and treaty reinsurance, that you need to explain. Okay, next, question number 20. Just a second. Yeah. Okay, question number 20. During the tax audit, yeah. During the tax of a company, it is noticed by you that the company is deducting ESI and PF from the remuneration of its employees in accordance with the requirements of applicable laws and regulations. The contributions as stated below together with the company share of employer. Okay, here are the details with respect to ESI of employee share as well as employer share. Now what they are asking: discuss how you would deal with the above matters as a tax auditor while uploading form 3CA 3CD. How you will disclose them in form 3CA 3CD? First of all, and PF, these are employee share. Now the employee share you need to disclose in clause 20b. Sorry, yeah, in clause 20b you need to disclose. Now here you are having only disclosure requirement. Okay, you need to disclose what is the amount of ESI or PF that you have received from the employee, and what is the due date for payment, for paying it with the authority or depositing with the authority, and what is the actual date of payment. Only that requirement you have. Okay, you are not having any requirement to give opinion on allowability or disallowability of the employee share. You have to just disclose. And coming to the employer share, now employer share will be allowed as a deduction only if you pay it to the authority within the due date for filing income tax return. Now if you see, these have been paid on 14th April and 18th April, which is before filing the income tax, before due date for income tax return for that respective year. So they will be allowed as expenditure for the employer, and you need to disclose them in clause 26, clause 26 BA. Okay, there is a disclosure requirement. Just a second. Yeah. Next, question number 21. PKS and associates are owners of a limited company having an aggregate debt burden of 10th crores. The company defaulted due to the failure of corporate governance across all its group companies and window dressed its financial statements. Further, upon receipt of a report from the Registrar of Companies in this regard, the Ministry of Corporate Affairs directed Serious Fraud Investigation Office to investigate into affairs of the company and its subsidiaries. Okay, SFIO is also involved. Now, SFIO report highlighted failure on part of audit firm to report fraud in the company to the central government, siphoning off and diversion of funds, and many other lapses, including collusion in fraud by the auditors themselves. Now, MCA filed a petition before NCLT for removal of auditors, and the final order was passed by NCLT highlighting collusion between management and auditors for falsifying books of accounts. Now, in this background, comment on the above situation with reference to consequences for auditors under the Companies Act. So, what consequences the auditor will face here? First of all, if an order has been passed by NCLT removing the auditor, then the auditor will be disqualified to be appointed. Okay, that particular chart accountant will be disqualified to be appointed as auditor for a period of 5 years in any other company. Okay, that is the first consequence that he has to face. Next, in this situation, he will also be liable for fraud under section 447 of the Companies Act 2013, and also he has failed to communicate fraud to the central government, so he will have to pay a penalty of 5 lakh rupees. These are the consequences that has to be faced by the auditor. Next, question number 22. Mrs. Manidhari and company chartered accountants have been approached by Rajul Limited, a company engaged in iron and steel manufacturing industry. The company has been facing the following operational issues. Okay, what are the operational issues that the company is facing? First one, penal interest for delayed payments to overseas vendors despite having enough cash flows. Even though they are having enough cash flows, they are paying penal interest for delay payment to the vendors. That is the first operational issues. Next operational issue, despite having regular production and enough inventory, delays in shipping the final goods to the customers leading to deteriorating vendor rating. Now, as a partner of Mrs. Manidhari and company, through detailed discussion with senior manager of Rajul Limited, you have concluded that all these delays are because of long decision making in the management cycles. See, these operational issues have arisen because of long decision making cycles of management in the company. As a consultant of the company, would you recommend management audit or operational audit? See, if these operational issues have arisen normally, then we will recommend operational audit. But these operational issues, they have arisen because of long decision making cycles of the management. So here we need to perform management audit, and you need to explain the difference between management audit and operational audit here. Okay, next, moving to question number 23. CA Kushal has been appointed as investigator by Mrs. XYZ and Associates. While undertaking this assignment of investigation, the subordinate staff of CA Kushal inquired about the following issues: whether an investigator is required to undertake a cent percent verification approach, or whether he can adopt selective verification. See, the investigator, it depends on the type of investigation. Type Based on type of investigation, the investigator will decide whether to perform cent percent investigation or on a uh, test basis or on a selective basis to perform the investigation. That depends on the type of investigation. Next, whether an investigator necessarily requires assistance of an expert. Yes, if investigator he needs any assistance of an expert, he can take the assistance of the expert for that particular area. But before taking the expert's assistance, the investigator has to first of all take consent from the appointing authority. That is a requirement. Next, whether an investigator can retain working papers or not. Yes, obviously, the investigator must retain the working papers. Only when he retains the working paper, he can prove the work that he has done in the court of law. Okay. Next, question number sorry, question number 24. It is with respect to the uh, various stages that are involved in the quality review. Okay, you can go through that stages that are involved in the quality review. Next, question number 25. Comment on the following scenario with reference to CA Act. Let us see. Statutory audit of Arihant Limited for the year 21-22 was done by CA Acharya. Okay. Arihant Limited was in existence since 2010. Okay. The relevant extract from the books of accounts of Arihant Limited are as below. Equity share capital, it is 5 lakh for 23, 5 lakh for 22. Reserves and surplus, it is minus 10 lakh for 23 and it's minus 8 lakh for 22. Now, if you see the net worth of this Arihant Limited is negative. So, you can conclude that Arihant Limited is a sick industry or a sick company. And provision for audit fees. For financial year 21-22, it is 1 lakh. For financial year 22-23, it is 1 lakh. So, from this, you can conclude that previous year's audit fee, it was not paid to CA Acharya. And in this background, CNMA accepted the statutory audit of Arihant Limited for year 22-23 in spite of the fact that as on the date of acceptance by CNMA, the audit fee of CA Acharya was unpaid. Now, if you see, a chartered accountant in practice will be deemed to be guilty of professional misconduct if he accepts any audit wherein that particular company has not paid the undisputed audit fee of the previous auditor. But this is not applicable for a sick industry. Now, in this case, since the Arihant Limited is a sick industry, this requirement is not applicable, and CNME she can accept the audit even though the undisputed audit fee of the previous auditor is not paid. That you need to conclude. Okay. Next, question number 25B. CA Sumati is a practicing chartered accountant having office in Mumbai. CA Sumati is owner of domain cap.net. Okay, CA Sumati is owner of the website cap.net. In order to generate additional revenue, CA Sumati sold this domain name to XYZ Limited for earning royalty of 2,25,000. Okay, she is in practice and she has sold this domain by name cap.net to a particular company for a royalty of 2,25,000. One of the directors of XYZ Limited contended that CA Sumati has violated the code of conduct. CA Sumati responded that there is no violation on the code of conduct as selling of a domain name is not related to any professional assignment which requires approval of the institute. Now, if you see, as per Schedule 1, Part 1, Clause 1, you should not Clause 1, Clause 11, you should not engage in any other businesses apart from being in practice. So, here, apart from being in practice without the prior permission of the institute. Now, if you see this selling of domain, it is not generally permitted by the institute. So, the CA Sumati, who is in practice, she will be deemed to be guilty of professional misconduct. Okay. This is the discussion of RTP. Hope this discussion it will be useful to you. And if you want to purchase any of our classes, you can visit our website lecturepedia.in and you can place your order. I'll be winding up this video as of now. Take care. Bye bye. See you.